Welcome, viewers, for another episode from my podcast. And today, again, we have with us Major General SQ Ahmed, who has already spoken to us on financial issues in investment in two earlier episodes, which I recommend to you. They're very interesting, full of information. Today, we are going to be talking about a very live topic which is there today, which is happening. That is the impact of the tariffs and what is, we would like to take the views of Major Lescu Ahmed on this. So, General Lescu, first question to you is the market reaction has been pretty harsh. Despite the tariffs not being, is so much against us, though still substantial, but not so much as compared to maybe others. So, somewhere in between we are. So, what is your view on that? SQ, please.
Sir, good morning to you, sir. Firstly, thank you very much for welcoming me again. And you have touched a very dynamic subject today, which is very, very live and actually happening in the market. Sir, what happened is that this tariff is something which is actually breaking the established norms of trade. These were established after First World War, where the dollarization has come into effect in the 1944-45 meeting that took place. The countries accepted that trade, and it was an established trade till such time, somewhere in the 80s, it was touched again by Ronald Reagan and Margaret Thatcher from Britain. And some more countries allowed to join this exclusive club. Now, this particular time, what the Trump government has put the tariff, it's breaking those norms. It is no more following the established patterns, and it is purely on the trade deficit that they have taken a call to put the tariff. Now, this has hurt, firstly, the established trades. It has put a lot of tariff on the countries that were carrying out a bilateral trade with the US government. And naturally, the prices of the products have become very high. So the complete global flow chain of products from place A to place B is now seen in a very, very different light. And why there is so much of confusion is because there is not much of transparency as to how these tariffs have been laid. So it's meant for people guessing. Some kind of formula has been put out that, okay, it is a delta tariff between the exports versus imports to the US government divided by the longevity of the tariff, the impact of the trade on that. There is a sigma and a phi that has been put, which has not been very clearly explained. And based on that, they have come with a figure as to how much will be the tariff against that country. And the Trump administration has very coolly said that we will give 50% discount on that. So whatever figure that comes out after the delta divided by 2 is the tariff that they have imposed. And that's how India stands at 56% of that delta, and 50%, 26% is the tariff that has been placed on us. And similarly, the list, which is very popular going on the media, the Trump holding that list of those countries led by China, which is put 34% tariff and further going down. So this has impacted in a very imbalanced way. And that is why there is a little panic in the market. And I think it will take some time before it settles down. Sir.
Thank you very much for that. In fact, there were some news articles which I was seeing that there's some negotiations which are happening with our negotiations are happening with the United States on this issue. Do you think that there's any chance of this tariffs reducing or something being worked out which helps reduce the tariffs again to some workable levels? SQ, please.
Sir, this is a very valid question again. At the moment, it's everybody's guess. It seems that the Trump administration has found this formula as a formula for growth of their own industry. Where the Trump administration is threatened is the deindustrialization of US. US was more into providing exports to other countries based on IT, based on the completed product solutions, which is not industry based on their military power. So what has happened over the last 2 decades from 1990 onwards, the complete industry has shifted towards China. In fact, most of the US component parts were also made in China because of cheap labor, water, resources, etc. Like their chips also were made in China till some time back. Now, Trump has seen this. Their industries are lying vacant. There are no jobs. So he feels that by doing this tariff, he is wanting and he's getting the industries back into America. Whether it happens or not, well, time only will tell. But this is his belief. And he wants to build the base and he wants to help those people which have voted him to power, they belong to this category. Now, if that be so, taking a clue from this, it is very difficult that he would roll back this tariff, though some people were initially expecting. So my belief is that there may not be a rollback on this, but definitely a lot of arm twisting will go around. And that is where the negotiations have started. What does Trump want? He wants, if we start buying his goods, so the delta which he has, the formula that he has given, the more he exports to the other countries, the delta reduces and the tariff reduces, minimum being 10% to everyone. So for example, like India is exporting to US about $80 million and importing from them about 37 to $40 million. Exact figures can be checked. So the delta comes around 40 odd divided by those factors that he has given out. So now if we can reduce this delta from 80, if we start from 40, if we start importing more than 40, the delta will reduce. The denominator will reduce and hence the tariff might go down. So these kind of negotiations are happening. The countries are actually reducing all the tariffs. The reciprocal tariffs have been reduced by certain countries which cannot stand such harsh measures and trying to negotiate to come on a good trade table with the US. On the contrary, the strong country which he wants to actually address, that is China, the second largest economy. China is playing the other way around. They are not bending to the rules of the US government. They are imposing their own tariffs because China is also a very big trading economy. So like Trump increased the tariff to 34%, China immediately imposed the same tariff on the US goods. So now this is a trade war between the two trading giants. Now last night, Trump has imposed another 50% tariff on them. So the tariff of China has become 104%, which is very huge. It's almost like a car of China was selling at $10,000 will now be sold at $20,000 overnight. So this is going to cause a big disruption in the goods of China being sold into US markets. So let's wait and see what the China has to do now, because they may go the same way, put a very hard stance. Whether they will come on negotiating table, it is doubtful at the moment, sir. So I think this trade war is going to continue, but back-end negotiations one-to-one by the government probably will favor individually based on the outcome of their negotiation. India also stands to probably gain because there are more tariffs on the country which are competing with India. And well, maybe in the next question I'll answer if you ask me about what will now happen if China is 104%. How do we look at it? So a lot of people are asking me this question. I think if this find interest, I'll answer that question again. But this, I feel, to answer your question correctly, probably we won't see a rollback, but we will see a lot of pluses and minuses, and which will keep the market volatile for next at least a quarter. Sir.
Thank you for that. This complete the situation as it is now. So what do you feel an investor should do in this situation? SQ, please.
That's a very big question, sir. Investors are actually confused at the moment. A long-term investor still has not much to lose. Now, at this point in time, there are three types of persons who are looking at the market. One who's fully invested. The person who is fully invested his wealth into the market and is not put more money into it because he's already exhausted of his investments, probably would have lost quite a bit of his portfolio in this turmoil in the last about month or so, since I will say February onwards. So he doesn't have much choice. It's better to stay invested because eventually our market forces are strong. We have a strong internal economy on which India can grow. So it's better to stay invested, wait for the market to bounce back, which eventually it should. It may take some time, maybe a quarter or two, or maybe slightly more. So for him, it's better to stay invested. There were some smart investors who have who have taken out the money at the right time in January and have some cash and sitting on it on the sidelines. they were probably worried of how the markets will go after the Trump tariffs. Now, for those investors, this is the right time to start looking at the market on a day-to-day basis. I think if they are out of the market, the safest bet is to go for Indian consumption story. Now, when I say Indian consumption story, means the story which is not dependent on the Trump tariffs at all. Those markets are likely to go up because Indian economy is strong. So, if to clarify to the investors what we should be looking at, like first April onwards, money is going to come in the hand of people because of the trade, because of the tax relief given by the government. So this money will be invested by people in activities which interest them, like going on a holiday, vacation, air travel, cinema, eating out, those fast eating platforms like I won't name them. We all know about it, sir. So these kind of things are going to grow. Where the money is going to go? It's going to go into the banks. If somebody wants to save with lucrative FD rates and with the present rate cut coming, which is just announced by the RBI governor, another 0.25% rate cut has been given. So it's again going to stimulus the our economy. So these are the places. There are NBFCs which are there. So, these institutions are going to gain. Plus, their housing sector is going to grow. This is reality state is in a good place. So these are all markets, cements, infrastructure, the government spending and the capex. So there is huge potential within our country, actually, based on which we are projecting that India will continue to remain strong and will come out of it. But those sectors which are dependent on US market, like the safest thing is IT. IT is very solidly at the moment at the bottom, is going down. Pharma always comes under scanner. And anything which has got a trade to do with the US, probably it's best at the moment avoided. Another sector which is doing very well is the power sector, alternate source energy. We talked about it last time. So these are all going to go up. But one of the sectors which we were talking about the artificial intelligence, that we may have to carry out a realistic check because our AI was still much dependent on the US. So how the US is going to act on that, probably we should watch that space with caution. So these kind of investors have got a lot of opportunity. And somebody who's new, who wants to now come in because there is an opportunity, is the third set of investor. Some youngsters of today, I think for them, best is that they should go for mutual funds because they may not be able to understand this whole gimmick. Go for mutual funds. Our large cap mutual funds will stand to do good in the present times. And if somebody is slightly adventurous, you should go for a multi-cap mutual fund where the fund manager can play with the small caps into the favor of the fund. So I think this space will be very good for the next 1 year for our new investors.
Thank you very much for that. And finally, I just say, if you could just sum up everything you said today as a final sort of a question to you.
Very well, sir. So what we are staring in the eye is that there is a Trump tariff mania which is there in the market. We should not fear this mania. Second, we have great, strong opportunities within our own country. We should focus on them and try and invest in them rather than getting caught in the noise of the Trump tariff mania. We have enough sectors, as I just mentioned. Third, new investors should not get deterred by this. In fact, they should look at it as an opportunity. Fourth, the investors which are already there in the market and they are on a SIP mode, this is the best time for them. Do not stop the SIP. Maybe they can start looking at which sectors they can do the SIP on so that money should continue to flow. And fifth, the persons who are already stuck in the market because they could not get out of the time, don't worry. There will be a better time that will come and you will eventually get out of this because you don't have much to do rather than booking losses. If you are in a position to book loss, then look at those sectors to book loss where we have trade with the US and the balance of the sectors just hold tight. Probably you will sail through. I will just want to add on one more talk about this. We are in competition with China as far as the trade is concerned. Now, US has put 104% tariff on China. I just explained that the goods are going to double the price there. So there are two issues there. One, advantageous issue. So whatever stuff the China was sending to the US and we are also sending to the US, in comparison, our price of that commodity in US will be much cheaper. So there we stand to gain. Please look at that commodity. If you find a share in that commodity, please invest in that, because that is an opportunity buy. The threat is that whenever such a situation happens, what will China do with so much of surplus of goods? It's going to start dumping. It's going to start dumping in any market that is available to him. So in those markets, if our goods are going, then it's going to be a threat to us, because those goods will be now much cheaper. So we have to really play goods wise. The second threat that comes is that the yuan which is there, in such situations, China generally depreciates their yuan, and if that gets depreciated, our currency will also have an impact. So that's another negative. Otherwise, I think India is doing pretty good. We should have faith in our India story. And it's just a time, it's like any other. We had 2008 crisis, we overcame. We had crisis in the COVID time, we overcame. And I'm very confident we should overcome this also. Sir.
Thank you. And on that very positive note, viewers, we will thank on behalf of you, Major SQ Ahmed, for coming back to my podcast and talking on this very important issue. And with that, I bring this particular episode to a close. I look forward to bringing him back on this podcast in future as well. Thank you, Jalal Ahmed. All the best. Jai Hind.